prospective innovators. So we're glad to have you here tonight. Applications are open. I know that it's working because I'm seeing applications start to trickle in, which is what we sort of expect this time of year. The application fee is $149, and the application deadline is just actually 41 days away now. 41 days from now, we're going to close the applications. We're going to celebrate with all of you on December the 15th. And the way that you apply is you go to the website, thesdangels.com/apply, or there's a button at the top. And then if you scroll down on that page, you'll see this countdown and the apply button. And that apply button is going to take you over to Gus, which is the platform that we use to manage the San Diego Angel Conference applications. We use that for the investors to go through their decision-making process as well. So my breakout room tonight is going to focus on the GUST application. For anybody who has questions, this will be a great night to be able to share your screen, show me where you're stuck, and then I'll help you work through any of those things, but that will be a little later in the program. We also want to give a huge thanks to Nextwork, which is our title sponsor this year. Nextwork is a local San Diego company that does outsourced software development, app development, website development, anything that you would need a programmer for, they can do. So if you're trying to make something work that's off the shelf and you're trying to get it to do something extra, or if you need to build something from scratch, Nextwork is a great resource for you. And also, I would like to thank all our partners. So we have a fantastic group of partners. San Diego is very rich with resources for innovators and entrepreneurs. We have a lot of organizations to choose from, and we work very closely with this group of organizational partners to help companies like yours do all the things that you need to do to be able to be successful in the long run. All right, quick overview if you haven't seen it before. This is session 8 of the E-Track. When we get done with this part, that first all blue funnel there, and tonight's going to be my night of all funnels. I think I told you guys the first night that you're going to see me do the funnel thing at some point, but tonight's the funnel night. So we're gonna work this whole fall series to help as many companies as we can get ready for the application process. And the application is open to any entrepreneur in Mexico, Canada, or the United States who's trying to raise money, angel investment up to about $2 million. That's a good sweet spot for us. And we're looking for companies that are able to take advantage of both the support and advice, also the cash. So we're working towards the $200,000 winner take all prize. We always say it that way. So the first 200,000 will go to a selected winner. And then if they raise more money than that, that money will get invested in additional companies that the investors choose. So the way it works is you turn your application in on December 12th, or on December 15th. On January 5th, we hand all of the deals over to the investors. They've got a couple of weeks to go through all of the deals on paper. So they're going to be going into the GUST portal site, looking at all that information, and they're going to try and narrow it to 24. So we'll have somewhere between 24 and 30 quarterfinalists. They'll invite all of the quarterfinalists in for a 3-minute pitch. Then they'll pick 12 semifinalists. Semifinalists will come in for a 10-minute pitch. And then we will choose 6 finalists, which we will do a deep dive on and a full due diligence process very, very quickly, about 5 weeks for that whole process. And then on the main event, the end of March, we will pick a winner and perhaps some runners up. So that's the whole process in a nutshell. I know some of you have been with us this whole series and you've seen me say this over and over, but I just can't say it enough and cannot thank this group enough. So this is our fund management group. Co-fund managers this year are Brian Engelman and Sumner Webster. And then we also have our fund management group. So the fund manager of SDAC 1, who's also our speaker tonight, Dr. Sylvia Ma, fund manager of SDAC 2, Benton Moore, fund manager of SDAC 3, Amy Duncan. And in addition, we've got Tam Stevenson, Jad Duncan, Richard Lynn.
Yeah, well, that seems like it might have been for a science project.
I don't think that was one of our investors. If any of our fund managers wanted to jump in and say a little something here, you're more than welcome to. All right, and I know Brian couldn't join us tonight. And I think I saw Benton come in, but I can't see who all is here right now. And then of course you've got Chris and I as staff support for this activity, and we're glad to be here and happy to help however we can. Our speaker for tonight is Dr. Sylvia Ma. Sylvia has spoken to this group before. She has this really great piece on cultivating investors. And so I just really wanted her to share that with you tonight. She is a very active angel investor. I think she'll tell you a little bit about that. She's an advocate for women and diverse founders. She's an author, speaker, and I put badass here. I don't get to say badass that often. She's been a tremendous, in San Diego, we know her as a local, but she's really a national or an international force for women and diverse founders. So with that, Sylvia, I'm going to stop sharing my screen and hand it over to you.
I'm muted. Here I go. Perfect. So let me just go make sure that everything is on here. Perfect. Done. I just want to make sure that I was said everything I needed to do. Okay. Perfect. I'm going to share my screen in a little bit. I'll introduce myself first. So I'm Dr. Sylvia Ma. Thank you, Misty. She always calls me badass. I'm like, what? Love all of the co-fund managers here that we have. Benton and Misty always gives me the opportunity to, share value with all of you. So this is really exciting to be here. I have more than 66 plus companies in my portfolio, only female-led businesses and BIPOC founders. I've been doing it for about 12 years. I have 3 exits and 1 IPO. And also I have invested in 11 emerging fund managers, many of them that are right here. So it's so nice. So that's been a role that I've taken very seriously, having coffee meetings. Benton didn't need any help, but he was awesome from day one, but everybody needs a little bit of help. So like helping and just showing up is equally as important as, having coffee meetings and stuff like that. So I say that because tonight we're talking about investor relations and investor kind of development and emails and funnels and tiers and coffee meetings. And it doesn't stop with just the entrepreneur. So I wanted to build a little bit of awareness from like kind of the beginning of this, is that on the investor side, we're doing exactly the same thing you are. So we're like entrepreneurs, just like you, trying to get better deals, better conversations with people, better relationships, building out our ecosystem. So I've given this talk over the years in different ways. So bear with me, I try to put it all in one. So that's why I was feverishly today trying to put it all together. I'm really knowing how are you showing up as entrepreneurs in the San Diego ecosystem, working through an e-track, learning about how to build out whatever you're building out, trying to see how do I talk better to investors, and also knowing that there are investors on the line and that you can make those introductions today, right? So I kind of made sure that there's little bits and pieces of things that you can actionably do today, tonight, this week with some of the investors here on the call. So you can actually test a couple of the things that I was kind of thinking about and ruminating. That's why it took me a little bit longer to get it all ready. So thank you for that. If you have any questions, I am an open book, so you can put it up. Thanks, Sarah. Up on the chat. I'm typically always checking that. And if there's a couple of different questions, I might wait until I finish something and then get to your questions. So don't think that I'm ignoring you. I am not. I think entrepreneurs are brilliant, wonderful humans in this world trying to innovate and impact to make this world a better place. So that's kind of where I come in and help and bring value to you. So let me share the screen. Oh wait, I have to go back to PowerPoint and go back to the very beginning. Sorry, give me 1 second. So, and Misty, I'm sorry, I did not have time to change it all to USD and of all the blues. So it's all red and pink and beautiful for women. So I will change it and then we can send it out to people. So I'm sorry that I didn't have time to do that.
No worries.
So, but it's meant for both males and females. I made sure that I took out a lot of the female factor pieces because there are some things that are specific to women and BIPOC founders, but I try to make it more open. So let me get this going. Can you see it when I share my screen? Yeah. Yes.
Yes.
Yeah, thank you. Awesome, awesome. So again, like I wanted to start off a little bit about the awareness of what the investor is thinking about when they're doing this kind of, when you're reaching out to them, when you're reaching out to them, they're thinking about sourcing. When you go into a due diligence, they're also thinking about due diligence. When you're doing your getting the paperwork all done, they're also thinking, how do we negotiate this? So know that it is the other side is equally as important. And I've seen the most successful entrepreneurs in this process and journey are the ones that build awareness within each and every step of their way, from the beginning towards due diligence, and especially through SDAC. And we want to get to yes, this is our ethos, but also like with the SDAC process, have that empathy and awareness that, hey, they're going through it. There's some new angel investors. I need to be a little bit more patient with how I go through the due diligence, instead of like a VC firm that might have like all these forms to fill out and they have it all like set up and they have analysts looking at it. We as angel investors might not have that. So just that awareness of who you're speaking to is super important. And also think about that return on investment and return on impact. I talk a lot about this as an investor. Of course, investors want the return on investment. You got to have your numbers right. Your valuation needs to be appropriate for the market. All of that needs to be like check, check, check. And that's what Misty and Chris and everybody here helps you with, to understand that. But know that the investors are also looking at return on impact, because it is the most riskiest asset class that they have their wealth in. So they're not thinking, oh, we're going to make lots of money and that's it, right? And some of them die. So they have to think about, wow, what's the return on impact? Am I going to make this world a better place? I know Misty's ethos of her investment is like, I want to see the innovations that will make this world a better place. So think about that as well. They're thinking about those two things. Of course, they're leaning into the return on investment and they're going to ask you those questions, boom, boom, boom. But they're also putting the acceleration on the return on impact. And that's what they're asking you about with your values and where you're going. Again, trust is the most valuable currency for the investor. So know that building that trust is super important in this whole journey. Again, I already talked about the risk. This is the riskiest asset class in their entire wealth portfolio. If you talk to any banker, and I've talked to them because I was pushed on them, and I say, oh, so I'm doing being an angel investor. And they're like, what? Yeah, we can't talk to, no, like, why are you doing that? So no matter what they're getting consistently told by their analysts and their people, don't do it. Some of them embrace it and they're like, we don't care. Most investors do this on weekends, nights, and early mornings, right? Of going through due diligence, especially this early stage. So I'm very mindful that most of you on this call are either creating your company, talking to early stage investors. Understand that, right? Because if you send them an email like at noon and they're like, okay, like, what are they going to get back to me? They probably not until the next day, because they're looking at weekends and evenings. And I know that like on Instagram, some of the investors on our Instagram or on Twitter, they're tweeting it up and they're on Instagram doing stories at midnight, right? As they're reviewing pitch decks. And they're all servant leaders. So I did a survey across the ecosystem, and there is a direct correlation through the data that I obtained that the investors are the most active servant leaders in their ecosystem. So they serve as mentors and judges and all that. So they don't do it necessarily only for the money. So I think that this is just an awareness and a framing that is really important. A little bit about the benefits of why angel investors do it. And I'm not going to go into because you're not investors, but understanding a couple of different things here. They want this professional variety is one thing, right? They want to see a new innovation in their space. Maybe that's the conversation you have during the coffee meeting. If you're thinking that, oh, they want to do network opportunities, they do want to grow their network, maybe you connecting them with another entrepreneur, another investor is actually going to be like, oh, that's one of the benefits that I like about angel investing. This entrepreneur is amazing, right? So just think about that this is just giving you a look at what the benefits for them, why they're doing it. And what's important for you is to do risk mitigation, right? They're like, okay, the market's risky. And then you can mitigate that in a certain way. Oh, this is risky. You don't have a team that's built out. Make sure that you're always risk mitigating their conversations and their questions. And I love this quote because it just kind of gives you that ethos of that angel investor. And this is one of the investors that is in my network. I've always felt that entrepreneurship is the future of our economy. I think that people have the potential that make real, transformative, substantive changes to how we do things. To be on the ground floor of something new, that's exciting. Do you see a lot of the things that the reasons why they would say yes? You have to play into that as you're doing your development. You have to play into like something that's exciting. You can't go to a pitch and you can't go to a coffee meeting or due diligence being, hi, I'm really excited about my company and it's going to transform the world. You'll be like, oh my gosh, this innovation is going to change this because of these things. And I'm excited because I have these partners that are going at, they're collaborating with me and we're going to take over all of those customers, and those customers are always buying from us. And we've had surveys with customers. And you know what we found out? These things that angel investor would be like, oh, that's kind of cool. Yeah, I want to be in on that. Let me write you a check, right? So this is a really transformative quote that I love kind of talking about. So now kind of goes into building out your investor personas. And there's obviously we've already talked about this in the E track is, does an investor invest in a horse, the idea or the business, or the jockey? So on the chat, please let us know what you think. Let's see. Yes, jockey. Thank you, Crystal. Thank you, Kyle. Yeah, there's some horses. Teresa, both. Thank you. Karen, jockey for Mohan. David, Benton. Yeah, jockey on a fast pony. I love it. Jockey, both. Thank you, Deborah. Thank you, Julie. Thank you, everybody. Thank you, Jamshid. I hopefully say that right. Deborah, thank you both. So thank you for answering that. Really, it's a lot to do with the jockey, right? So they're really wanting to interact with the founder. That founder needs to be gritty, determined, really know their industry so that anything that changes in the markets or the customers or their product, they can go through that. They can take that horse and go through it. Of course, I love some of the chats said both. I do agree with that too, right? Is that the idea has to be solid. The business model has to be solid. All of those things need to be in place. But that jockey is the one that really connects. And I wanted to bring this up again because this investor relationship wise, it's you. You are interacting with these investors. You get to really take the reins and go down this path, this journey with the investor. So I'm going to walk you through this investor persona, and I will share this with everybody. But this is a way, and this is on a PowerPoint that you can just, it's a spreadsheet, and I also have a spreadsheet for this that I can share. So really the investor persona is how you can build out your investor persona, because the first thing you need to know is who is the person that you want to have an investment from, and why would they be investing in you? And the reason why this is important, who has done a customer persona, right? You can put up your hands if you want, right? Yeah, thank you, Misty. Thank you, Kelly. All of you, I know that a lot of you guys are off video, it doesn't matter, but I know most of you guys have, right? It's kind of like an entrepreneurship 101 type of thing, right? But really thinking about it as the investor is so, so important. I've taught this so many times and the entrepreneurs are like, what? This is so cool. So really trying to think about which investors are values aligned to your company, right? Of course, you should do a values exercise of what your values are, and then basically match that with the investors. You wish that those investors would do a value analysis, but you'll kind of get that through the interactions that you have with the investor. How do you want to who do you want to invest in your company, and who would you want to have talk about you to others? That's important, right? Because if that investor invests in you and they love your technology and they love who you are as the jockey, and you're trying to build out, let's say, a $500,000 round, and they're going to give you a $25,000 check, what happens to the rest? You have to go knock on everybody's door, right? But if they really understand who you are, they have this values alignment, they are your investor persona, they will talk to their investors, their investor colleagues, and you build out the best investor, portfolio, because you've really been diligent on figuring this out, right? I wanted to kind of put that in because that allows you to really accelerate your connection. So at the very top, you can write down your name of your investor or your investor group. It can be a person or it can be a group, like SDAC should be one of them, right? And it could be also a venture capital firm. So it depends on where you are. You can change it out. You can do 10 of these if you want. I would recommend only having maybe 2 or 3 so that you can be very laser focused. I always like to put a picture on the top right, because then you kind of can have an idea of who this persona is. You might not know who it is, but maybe you have an idea of what that persona looks like, typical to a customer persona. What's their check size? What's their portfolio size? Like for me, you just found out my portfolio size is 66 plus companies, right? My check size, I did not say this because I did not say my whole investment thesis, is between, I've written the smallest $5,000 checks all the way up to 200,000. And my minimum, my average is about 25K. So now you know, right? That's my check size as an individual angel investor who's pretty active. And what's a stage, right? My stage is seed. Pre-seed is a little harder, seed and seed plus. So that's kind of like my, what I do, right, as an investor. So, and a lot of questions come up whenever I give this talk is that, how do you find this out? LinkedIn. And we're going to talk about all the places that you can find things like this: Crunchbase, LinkedIn, PitchBook, Gust, everywhere. And I have a list of that. So you don't have to worry about that. Let's go down one more level. It's kind of like the levels of abstraction here. What are their relative behaviors? Do they donate to NGOs? Is it like for Kelly? I know you're in the room, Kelly. I'm going to pick on you because I know that you're here. Sorry, I just got out of my frame here. Kelly, yeah. So you're going to be interested in having somebody who is socially conscious as an investor. This investor prefers to make their own investment decisions. All of those things that you can find. Thank you, Kelly. Hearts to you too. Is they will either be on Instagram or Twitter or LinkedIn talking about it, the articles that they share, the posts that they make. You will get an idea of their relative behaviors. You just have to dig for it. It's not easy, right? What are their needs and goals? Do they want a diversification? Do they want a diversified portfolio? Do they want to increase wealth? Do they want to empower founders? Do they want to promote growth in their ecosystem? Like somebody like that would be like the Neil Blooms of the world, right? Neil Bloom is very active in San Diego, and he really cares about the growth of his ecosystem, similar to Misty, right? She wants to promote growth in her ecosystem. So that's her need and her goal, right? And again, how do you find that out? It's just like basically Google stalking them. But the other way that you can find out is to have a conversation with them, like get on their calendar, either ask them for a coffee meeting. Typically they have like a Calendly or something like that you can reach out to. So there's a lot of different ways of interacting to find out who that is. But again, if you don't know who it is and you're trying to build this based on a perspective of like who could possibly be an investor, think about it. Say, okay, do you want an investor to be the promoter of their ecosystem? Yes or no? For Kelly, it's like the relative behaviors. Like, yes, I want them to be socially conscious. You might not know who it is, but you want to say, okay, these are the type of behaviors that I want to have in my investor. So relative motivations, the incentive, achievement, and power. So that goes into 3 kind of ethos of that behavior. What incentivizes them? what are the achievements that they have, and what's the power that they want. Do they want like more relational power? Do they want to be like, you know, like multi-billionaires by like year 5, which is, yeah, go to the stock market. And so those are the kinds of things that you want to make sure, like, what are those motivations? And then the easy one is demographics and psychographics. So demographics would be, you know, I want to have an investor who is a guy. He's about 40 years old. He's in San Diego because, man, I really care about San Diego, or I want to be nationwide. Psychographics is he loves his Starbucks in the morning, and or he cares about family, whatever that is, because maybe you have a family app or something like that. So those are the demographics and psychographics that you can build out there. Then the third thing is the last thing is industries. So there might be something that you say, hey, this investor persona is industry agnostic. You put it there in the notes, right? Industry agnostic. But if you want that investor to be specific to an industry, you want to say, okay, I want it to e-commerce, I want blockchain, I want biotech, whatever it is that you're doing. And then in the notes, you can actually write in, hey, I want this specific person, this. When you have that built out, it kind of gives you that like breath of fresh air of saying, oh, that's the type of investor that I want to go after. You're not doing it as a gunshot thing. You're basically just saying, I need this investor to come into my life. Right. And how do I find them? We're going to go into the actionable steps to do that. So I think, okay, I'm going to answer some of the questions here because this is how, this is kind of a good stopping point. Yeah, stage is key. Very good. Let's see. Boom, boom, boom. Okay. So Sarah asked, how do you tell the qualities of them? I think that your question is like, how do you tell what the qualities are of this investor? And Mike, I'm going to get to you because you raised your hand. Thank you. Or you raise your hand for something else. But the qualities is that, you know, it's not like you're going to say, oh, I always say Maria, you want Maria as an investor. You're saying, I want somebody who cares about their community, right? And just write that into this investor persona. And how you find them, how you tell the qualities that they have is that, you know, you're going to go on LinkedIn or you're going to go on Google and say, okay, community involvement. Or if you meet somebody in your ecosystem, you can actually go to their link. Actually, whenever I look at LinkedIn profiles of investors that I meet, let's say networking, I actually look at their volunteer segments at the very bottom of LinkedIn. I always go there because you kind of get some great insight into like, oh, are they, you know, part of their Jewish schools, or they've been on the school board, or they've volunteered in YMCA. All of those things for me are important. So I kind of go down there to see the qualities of what they are. So hopefully that answered your question. Thank you, Amy. Stage is key, is really important because that investor, you know, you might be at early stage. Don't do an investor persona of a VC. The investor persona is exactly the stage that you are, and they're okay with ambiguity, right? They don't need like all the financial statements all built out. How do you get access to PitchBook? I'm also asking that too. They do have a free trial, and you can get that free trial, and then they're gonna, you know, ask you to spend money. But yes, and then also some people do share articles and stuff like that. So that's always one way that I sometimes get some PitchBook information. Can we get a list of investors and contact info? Well, that's a holy grail. I think that if I was an entrepreneur, and I have been an entrepreneur for many years, and I got this like downloaded list of investors and contact info, it would not serve me it wouldn't serve me, because I want to interact and connect with the right investors, because those right investors will be the ones that give me the network that I need, the contacts that I need, and the advice that I need, right? And there are so many lists online of investors and contact info out there. You can, and this is a good place to start, saying my investor persona is, I need people who are in the healthcare and tech space. Like, go on LinkedIn, go on Google, say, who's the acquisition? I go through this a little bit later on. Who's been acquired in the life science space? Okay, great. Who were their investors? The VCs. Well, who were the ones before those VCs? Okay, you get that information, then you connect with them. So there's this way of finding that out. Yeah, Kelly, thank you. Yeah, there are lots of lists. I can share links to some, but the SDAC investor info isn't shared with us. Many of them can be found elsewhere. I think the SDAC investors, some of them follow SDAC San Diego Angel Conference on LinkedIn. So again, it's about starting small. Again, if I had a list of 1,000, I wouldn't even know where to start. Okay, at A, I understand that, but like doesn't serve you, right? So it's more of like, okay, you have all these SDAC investors. Have you exhausted all of the SDAC investors that are here every single week? Yes or no, right? Have you said, are they my investor persona? And if they're not, then you're like, hey, you're not my investor persona, but could you introduce me to this person? But those are the things that are really important to know, that you have a direct ask based on this investor persona. You go up to investors and say, I am looking for this person. And maybe that's he or she is not that investor, but man, can he or she introduce you to the right one? Heck yes, right? Because we all want to grow our ecosystems. Any resources anyone know for finding advisors? I'm on Advisory Cloud. That's one way of doing it, but that's not ideal. Finding advisors is being curious in your ecosystem. That's one thing that I always say to entrepreneurs: be curious, go to events like this, reach out to everybody who's on this call, and say, hey, how you doing? Can I grab some time? And they're probably going to say yes. And you do that. And that might be an advisor, right? And the advisors that are at the San Diego Business, SBDC are wonderful, and resources as well. So Chris put that out there on the Slack. Go look at the Slack. Okay, great. Perfect. Misty says, Johan, I'll talk about this in the next section. Perfect. Also avoid spray and pray. Amy, I'm going to go into that in a little bit. Really making sure that you're targeted to like-minded investors. You're going to save tons of time from you and tons of time from that investor. And let me tell you, investors talk to investors. So if we're getting like pitched by somebody, or we're getting like these cold emails, we are talking to each other, saying, oh, you know what about this entrepreneur that's sending me all these emails? It does go around. So just be mindful and respectful of everybody's time. And Greg, also ACA has a complete list of approved angel groups with websites. That is completely true. And also Gus is a great free resource. Wonderful. So I got through all of the questions. I'm going to move on. So what do you do now that you have the investor persona? What's your action plan? This is one thing that I love to refer to, and this is something that, sorry, Benton, I put your name in there. So your investor persona, your persona. You're saying, hey, I need somebody who's in the medical device space, who has invested in medical devices, because Benton has. I think you have. Yes, no, I don't know. It doesn't matter. He's invested in medical devices. I need somebody in the medical device space. I have met Benton. I have talked to him. Great. That's one of my persons. You might only have one person on this list. That's okay. Like, you're going to build this out because you're being super focused and super direct with who you're going to be interacting with. So who specifically should you reach out to, and how easy is it to get connected? Because this will allow you to have a super amazing plan to be able to say, okay, I can reach out to these people. And yeah, you might exhaust all of these roads. That's okay. Then those people that you've exhausted, say, hey, I've exhausted everything. I've met with 50 investors. Can you introduce me to somebody else? Because this is exactly the person that I need. I will introduce anybody to that entrepreneur. If an entrepreneur comes up to me and shows me a spreadsheet of all the people that they've talked to, and they're like, I'm stuck, I will spend like an hour with them trying to figure out, how do we get you unstuck? But I can guarantee you that has only happened to me once in about 20 years, once, right? Out of thousands of people that I've mentored. And she came back every week, said, okay, I've gone through all the list. What's next? Okay, I've gone through all the list. What's next? Right? And like, that was awesome, right? So anyways, this allows you to be super focused. So first and foremost is who, and then it's a what, how, and there's a score, and then there's a tiers. So the first one is who. What types of people fit this characteristic of this investor persona? So Benton is an example of one of the investor personas that you have. Obviously, I'm trying to think about, you know what, we're all here at SDAC. Benton should be on your list, right? Because he knows everybody. Misty should be on your list because she knows everybody, right? What could these people help with my company or this person? Because you can also have Benton Moore, or you could have a group like Tech Coast Angels or SDAC or something like that. So he can help you with, he can invest, he can advise, he can introduce you to partners, and he can network to customers, right? And like, I'm just making this up. You can do whatever you want to do here. How could I get introduced? So with him, with Benton, you could get introduced right now through eTrack. I have it right there. You the check mark, you're done, right? But let's say if you didn't have eTrack, how would you get an introduction? You would say, okay, I need to work on my network. I need to find a warm outreach. I need to find somebody on LinkedIn, somebody who knows that person. And then basically here is based on the alignment of the investor persona that you're going after, and Benton's values are through the roof. He's like a very integrity driven human, and ease of contact. He's on the call with you, peoples. Chat with him, right? He's a 9 in my thing. I never score anybody at 10. So that's my personal opinion. So 9. So it's great. Benton is totally aligned to exactly the investor persona that you want. That's that funnel that you're looking at. Now, this last one is what I work with a lot of entrepreneurs is the tiers 1, 2, and 3. Where are they connected on LinkedIn? I love LinkedIn. A lot of investors are on LinkedIn. A lot of investors are on Twitter and Clubhouse. Clubhouse was crazy last weekend. Was able to meet with an entrepreneur today, and I'm going to help her with introductions to investors. Super cool woman. But that's also Clubhouse. But that if you're interested in that, I know Kelly is. But LinkedIn is the place. So you see, okay, tier 1 is Benton. You actually should have connected with Benton already. Right? So he should be tier 1. You know how you go in LinkedIn and you see that first connection, go first connection or second or third, then look at all the people that you know, reach out to them and say, how do I get an introduction? But at least you have your next steps to do. If that person is second tiered or second connected to you on LinkedIn, what's your action step in the next like couple days? Right? Reaching out to the people who are first connected to them, right? So this is a really easy way to have an action plan in 2 slides to really be focused on the investor who's going to bring you value, who's going to invest in you in the end. So hopefully that answered some questions. Okay, yeah, I'm going to answer the rest of the chat. Yeah, perfect. What is a warm outreach? Thank you, Crystal, for that question. And we're going to go into some templates that are for cold and warm intros or cold and warm emails. So a warm outreach is that, let's say Benton, you're going to be my example, and Kelly, you're going to be my example for the 9. So Kelly wants to meet Benton. She does not know Benton. Kelly knows me. So she says to me, hey, Sylvia, can you introduce me to Benton? And I'm like, okay, Kelly, and we're going to go through this later. Give me a little blurb of your company, and I will make a warm intro. Then I go into my email and I say, hey, Benton, I met Kelly. She's amazing. And this is what her company does. And I copy and paste exactly what she sent me. Thank you. Happy connecting. Regards, Sylvia. What does that take me? 30 seconds, because Kelly was ready to go with her blurb, and we'll talk about that later. But that's how that warm outreach is. So, and then the other warm outreach is, there's so many different ones, but that's kind of like, it's a warm outreach. It's not cold. You know somebody who knows somebody. Another way is like you've met somebody in an event, and what I always do, I bookend through LinkedIn. So if I meet somebody, I consistently go through whoever's at an event, and I'm like, hey, I met you at this event. I always add a note to any introduction that I have, investor or entrepreneur or ecosystem builder or anybody. I say, I met you at this event. So excited to meet here and connect here. So when I go back to LinkedIn and I say, oh, they're my first connection, or maybe their second connection, they never accepted my connection. Anyways, no, I don't get mad. I just follow up with them again. I have an idea of where I met them, and I say, hey, I haven't heard from you, or hey, I have an entrepreneur. Like usually I meet all of these investors in these, I came back from a conference last week. met tons of new investors. I'm like, hey, I have this entrepreneur that I would like to introduce you to. We met at ACA, remember when we connected there? So those are the warm introductions and warm outreach. I went a little bit longer in that definition, but still, hopefully that helped. Okay, Timothy, good question. So I have the impression that investors are not interested in RL less than 100x and 1 billion market, true or false? Yeah, Benton is correct. Like that would be amazing, 100x, like amazing. But we're really looking, I mean, the truth is 10x and the truth is really 2, right? Only 1 in 10 survives. So really on average, we're looking at 2, only if you've like invested in Facebook, right? But like that's a unicorn, right? So there are some investors that are still back about 10 years ago. They still have that methodology now, which they should be going through our iTrack and getting some training, is that unicorns are super hard to do. A lot of people are investing in more zebras, in ones that will make a huge impact, which make a huge return for them, but they're looking at, let's say, a 10x to 20x. I know my best due diligence report, we put all the market data together and was like 65x. And that was like the best of my portfolio, right? So, and I've gotten back quite a bit of money from the exits that I have, and those were not even at 65x, right? Or even 100, and I was very happy with it. So it depends on the horizon, the time horizon. 100x in like 2 years, wow, that's like impossible. But 100x maybe in like 20 years could be a possibility, but that's now, then you have to look about what that return on investment is in that time horizon. So yeah, Benton answered that already, 3 to 5 years, that is correct. Look at like the 7 years, the 7 to 10 years is life science. Yeah, and Benton, thank you. Yes, this is just Sylvia. Start with 1, not a long list. Correct. Please add a note on LinkedIn outreach. Yes, that is true. Kelly addresses a San Diego unicorn for Halloween. I know, I saw lots of unicorns out there. So yeah, cheers, Flock Fright. Yeah, B Corp, definitely unicorn. Oh, Sarah, what is the very first company you ever invested in? So I invested in 2 kind of very close together, which was very exciting. And it was Hera Biosciences, which is now Antiva Bioscience. It was a company that it was doing HPV detection, early stage HPV detection, and it was super pre-seed, just in the lab, and it was a gentleman out of UCSD. And I told him, I said, you know what, you really need, and I've told this to a couple of people, you really need a female CEO in this space. So can we build that into our negotiations, that you will be searching for a female CEO when you do look for a CEO? Because he didn't want to run the company. I understood the science. I have a PhD. I understood it 100%. I knew the business side of it, loved the commercialization plan. And sure enough, he hired a female CEO, and she has hired now a whole female leadership team. So that is the power of a female investor. The second one, and they're still going on. I mean, this is like almost 10 years later. I'm a little like getting nervous here, but that's 10 years later. Am I worried? No, I know that when I invest, I have to think about throwing away that money, right? I have to be able to have that money to give to this entrepreneur and have them go with it and support them all the way through this amazing journey that we're doing together. And the second one was Hera Hub, which is a co-working space for female entrepreneurs. And the founder was Felina Hansen. And she's gone through licensing, franchising, all kinds of business models. And she's still around. And the exit, I don't know when that's going to happen, that I can't even think about what that exit is. Through COVID, it was super hard. So, you know, I'm just there always supporting her. I'm on her advisory council and just keeping on being her mentor, sorry, I'm going to sneeze. Her mentor, her advisor, her advocate, because you know what, if we're doing this together, we're going to grow together. But that's a smaller business, a different type than a biotech company that has like hundreds of employees, right? So those are my 2 first ones. And they meant a lot to me too, because I had an HPV scare and early stage cancer scare back then, 10 years ago. So when this opportunity came up to invest in something that that, you know, I was able, maybe 10 years from now, I will be able to, if I do survive cancer. I did not have cancer, which was like, thank God. But maybe later on, maybe right now, if it ever comes up, I can actually use the technology. So that was very, very cool to be part of that. And that was like, at that time, I really needed it. And then the Hair Hub was really at a time that female entrepreneurs did not have a space to really be collaborative and supportive. So anyways, that's why it's so, yeah, it's a perfect storm. Yeah, I didn't beat cancer. I just didn't get it, right? It was like, oh, shoot, like something's going to happen. Hopefully it was about like 2 weeks of saying, okay. And then this investment happened in that 2 weeks. Like he wanted to talk to me. I got introduced to him from an advisor at UCSD. So you see, advisors and mentors are super important. He introduced him to me. I'm like, well, it might be my first check. I don't even know. And I'm like, wow, I totally understand the industry. I totally understand the business. I'm like living proof that maybe this will work in 10 years and will help me. I'm like, heck yes, right? It was a little harder than that. I did see the due diligence and I did dive into it, but that was my first check. So yeah, I digress. So I know there's not any more questions. So I wanted to dive into, now that you know, okay, look, I know my investor persona, I'm going to build that out and I'm going to have 2 or 3 personas. And now I have an action plan to kind of get in front of that investor. There's still some nebulous pieces about the ecosystem, right? And the pipeline that you're going to get, because it's like this big, and we're going to create a funnel anyways later on and see what that really looks like. But you really have to be networked and active in your ecosystem. So I wanted to kind of touch on this a little bit because some people are more visual. So I wanted to kind of also give the visual learners out there a little bit of a way that you could do this in a little different way than, let's say, a spreadsheet. So the process, oh, I didn't know the funnel was here. I thought it was later on. So the funnel, again, this is a little bit visual. Do we need to stop, Misty, or can I just keep on going? I think I can keep on going. Okay, so the funnel here is really a sales funnel. I know Misty's going to cover a little bit of the sales funnel later on as well. But I wanted to point this out because this is the same funnel that investors look at. They look at, okay, 100, 1,000 deals, and then they go down. So again, this awareness piece at the very beginning that I talked about is equally important here. Know that this same thing, the same funnel, is how investors look at. And I added my little Sylvia personality of gratitude and servant leadership within this. So bear with me. So basically, the first here at the very top is send that initial email. That's kind of like when that starts, right? You might meet them at a conference, you might have whatever, but really just kind of, I made sure that first thing is that sending initial email. It might be a cold email, might be a warm email, but let's say you send out 100, you could send out 1,000. I just use an easy number to do all the percentages and stuff like that. So 100 initial emails. You might want to apply online if they ask you for a VC or an angel group, or let's say an individual angel sometimes has like a Google form that they want you to fill out. So that's about 75 actually respond and you can apply. Meet with investors. That's about 50. That's kind of like the screening piece, right? You're going to meet with them either at a dinner or in like a coffee meeting, or you're going to meet with that individual investor somehow over Zoom, whatever that takes. But that's kind of like the screening piece. Then you present to investors. I mean, the screening might take out half of the numbers of investors that you're looking at. So you're going to be presenting to about 25 out of 100. And that is like very good, right? Those are good statistics. It's sometimes people go down to like 10 that you end up presenting to. So you can be dismal, or I try to be a little bit more positive because I pick these bigger numbers because we've just talked about setting the right persona, right? If you have the right persona, you're sending the right emails and the targeted emails that will get more of an investor to open it and say yes. So that's why I kind of shifted a little bit of the numbers. So you're presenting to investors is about 25 investors. The due diligence process, you might go through it. Maybe about 15 of the 15 investors will go through the due diligence process with you. And that can be as small as like a week, 2 weeks, 1 month, 2 months, 3 months, 9 months, a year, right? Depending on where you are in your round, how prepared you are. if you have a deal room, if you don't. And I mean, you're going to learn about all this, but I'm not going to digress and go into the deal room. But the due diligence process can be arduous, easy, deep, wide, can be all of the above. Then I put this investment committee piece in there because there's some sort of group that gets together and talks about the due diligence, right? If it's an individual investor, I can guarantee you that they are talking to their committee, their advisors, their investors who are in the field, or whatever it is. I always call at least like 5 of my investor friends whenever I'm making an investment. Hey, what do you think about this? Oh, I don't know the industry really well because I am industry agnostic. Well, what do you think about this? Have you talked to this customer? Maybe I talked to a customer. But that investment committee, I just kept it like that it could be individual. They're calling up their friends. A group has actually a committee or a subcommittee in that industry. And then if you're looking at, let's say, a VC, they usually have an investment committee that goes through it. So I kind of just like bucket them all together. Then you have a term sheet, right? An alignment of term sheet between the two. Now, there's a difference between you have your lead investor versus your ones that are follow on, but no matter what the process is, you get a term sheet. You kind of go back and forth legal wise. Benton, he's a lawyer. So if you have questions about that, go talk to Benton. You close on the legal and the term sheets and all that, and the wire gets sent, right? Closing and wire, you're basically at, nothing kind of falls off. Only if there's some legal stuff that, let's say they need to look at the cap table again, and there's some legal stuff that has not been brought to the surface. So that is pre-investment. That's that funnel of pre-investment. Post-investment are, and there's much more information on post-investment, but I just kind of wanted to give you the overview. You continue having asks with that investor. Sometimes at the very beginning, it's like, hey, I need to fill out my round. I'm at like $400,000 to $500,000 round. Can you introduce me to that investor? And my investor persona is this. Here's my deal room. Can you share the due diligence? All of that is those asks. And those introductions are introductions to other investors. If you've closed a round, okay, introductions to customers and partners and all of that. That's kind of like that immediate, like after that funnel of the post-investment, those are kind of like the back and forth between an entrepreneur and an investor. And then it kind of slows down, right? Advising and mentoring from the investor. It's all what you put in and what the investor puts in. And then communication is quarterly reports. Then you ask them, how do they want you to communicate? And at the very end, at the, the base of it is always gratitude, right? As an entrepreneur, the more that you're graceful and grateful of this whole process, right? I've seen the best entrepreneurs get just slashed from any due diligence when they're not like, okay, how can I serve you? How can I help you? And they're like demanding, done, like not cool. Again, like being demanding and saying, hey, you haven't kind of responded to my email. Can we please, meet and have a coffee meeting? That's respectful. That's, an easy way, but it's not demanding and not ungrateful. So it's both of them too. Investors need to be grateful too, right? And have gratitude. So just know that that's part of this ethos that most of us are creating. Some do not apply to this, and that's okay. That might not be the best investor for you. So I think that I want to just make sure that I have nothing else here. Okay. Oh, and I'll do this one and then I'll take the questions. So I stole this from Founders Institute and kind of allowed you to see that there's a time horizon for all of this. And there's a likelihood to close. So it's the same sort of thing, right? The likelihood to close and like the numbers is like a reverse correlation. So I just left it like this because as a scientist, I'm kind of going backwards and going upside down. If you're like that, I'm sorry. But the time you have 0 time you're meeting them, you're inviting them to coffee, a news update, you want to meet at an event, a dinner invite, funding ask is at the number 6 up there. So, you're really looking at the time horizon at about a month, and the likelihood to close increases as you meet them, you invite them to coffee, you have a funding ask, you present to them. And then again, after the investment happens, there's more like news updates and quarterly reports. So kind of, I love this piece of this graph so that you can kind of have an idea of what that looks like. Okay. And then just another quick thing. This is what I teach to investors that it's super simple, is that it goes from idea to pitch deck, the meetings, due diligence, and term sheets. So it's a really easy transition for them to go through that as you are kind of going through that as well, right, of your journey. Yeah, that's it. So any questions at this point? How so? Okay, I think we don't have any questions in the chat. Anybody has any questions off the bat about the funnel? Thank you, Nicholas. Okay, I don't think I have any raised hands either. Okay, perfect. And then now going into kind of more of this hub and spoke that I was talking about, more of like this picturesque and not looking at spreadsheets and funnels. This gets presented a lot at, like, when I was innovation officer at UCSD, and I wanted to kind of go through this because we've just been focusing on this financial capital, right? This piece of this ecosystem that you're involved with. But this financial capital also has all of these other entities within the ecosystem that can actually help you get that list, get that warm introduction, have the sales funnel be, more robust, or, help you with all sorts of things, right? So this is your ecosystem that at the same time that you're growing your business, doing your financials, selling to customers, growing your team, fundraising, you have to think about your ecosystem. Entrepreneurship is so awesome, right? I'm just kidding, but entrepreneurship is awesome, but it's a lot, right? But I think that the more that I see, I see entrepreneurs caring about their ecosystem, is the more that they get warm introductions. They have investors that say, hey, I've seen you around the ecosystem forever. And sometimes you just need like a $5,000 check because you are trying to close out a round, or you might have an equity crowdfunding campaign, and you can say, hey, I have an equity crowdfunding campaign, come and invest with me. Maybe they'll invest $200 because you have given to your ecosystem. So I just want everybody to like own that. Kelly does a really good job. A lot of people on this call do a really good job. Yeah, I love it. Karen says, I have one very small investor who is the best strategic investor. I love that, right? Because it's not the check, right? I can write a check to somebody and I don't know their industry. I don't know anything. I can't help them, right? And I tell them right off the bat, I'm like, I can write you a check, right? I mean, of course it all has to make sense and all that good stuff, right? But I can't do anything else. And sometimes the deal doesn't go through because they're like, really? Yeah, you can't do anything else, right? And we agree on that. It's like, cool, fine. And there's other ones I'm like, I'm going to write you a check, and man, can I introduce you to a ton of people that are like, oh my gosh, we want you. And sometimes it's like a smaller check. I'm sorry, I don't have the funding right now. I can only write you a small check. They're like, oh my gosh, but we need you. Great, let's do it. So Karen, thank you. For saying that. So this is your ecosystem. Think about it in the top three is your financial capital, your human capital, and your relational capital. I was on a panel last week with Google Ventures, and we talked about all of these things. So everybody's talking about them, from VCs all the way to angel investors. So this financial capital is, of course, we've already talked about angel investors and VCs, but don't forget about your debt financiers and revenue-based financing and grants that are out there, the non-dilutive funding that's out there. Think about your human capital, right? You have some amazing entrepreneurs in residence right here on this call. Startup San Diego has great entrepreneurs in residence. There's accelerators out there like SBDC. We run an accelerator, Stella Labs. Adastra Venture kind of functions as an accelerator, and advisors out there. So advisors know investors, investors know advisors. Sometimes they're one and the same person. And so understand that human capital of the ecosystem. The relational capital is that strategic partner, like Karen just talked about. And also the relational capital could be early adopters, especially for equity crowdfunding, right? Those early adopters of your technology, they're going to love what you're doing, and they're going to be the ones that kind of come in and build out your, that capital piece. And then the bottom three are more of just like tactical pieces that you can count on your ecosystem to help you as you're growing your company. And again, really hyper focused on that investor relations. They know investors, right? They're working within the ecosystem. They've either built portfolios with investors. They've talked to investors. They know what investors like. They know if they like a cafe latte versus a cappuccino. They know that. Trust me, they know it, right? So the more that you can kind of connect with them, the more that you're going to get that insight on that investor persona. Super easy. And you don't have to Google stalk that many people. So the bottom three are technology, universities, and research institutes. Again, you in the ecosystem, you can get IP from them if you want to, as you're growing your business, or you can connect with them and see who they know. Service providers, lawyers, accountants, and marketers. I think I spelled that right. They know investors, they know the movers and shakers, and then the influencers. I always add this because let's say like the Neil Blooms of the world, Aurelia does a really good job of posting on LinkedIn. Lolita Tobbs of the world, she is an investor as well. They are influencers. They're the movers and shakers in their ecosystem. Twitter is like full of them, and media as well. So one of my former students, Fred Greer, he was a former student of mine, and he became part of the San Diego Business Journal. And he was a startup reporter. Like, who knew, right? When he was a student in a summer program that I developed. What, right? So the more that you kind of grow and you have this gratitude, this servant leadership, this ecosystem that you're building, when you're building out that investor persona, you will know who that person is and be able to get that warm introduction if you're active. You're here, so check mark, you've done one thing. So that's great. Yeah, Nicholas, thank you. Grow your ecosystem is true, but I'm trying to be super focused on this piece of developing investor relations. Right? Because we know the ecosystem, we've heard it all the time. You're like, yeah, Sylvia, be quiet, right? We've already heard it 1,001 times, but I'm trying to really hyper focus on how do you get an intro to an investor? How do you get and build out your investor list? This is how you do it, right? So that's that. Benton again. Yeah, investor relationships are tricky. I totally understand. And again, and I have Amy in there too. I did a couple of examples here. So yes, investor relations are really tricky. It's part art, part science. So that's why I kind of go through these pieces. So for the visual learners out there, I love doing hub and spoke, right? So LinkedIn used to do this for you. It was really a really cool tool. They don't do it anymore, which I miss. But you really need to build out your influencer network, right? So who are the investors in your ecosystem? I mean, you don't have to do this for everything, but let's say pick out 10 investors who who know the ecosystem, who are players, and see where do they kind of land and who can they interact with you, right? And introduce you to. So of course, the first, second, and third tiers on LinkedIn is really important. But if you're a visual learner, maybe you're going to have this huge, wonderful map of who's who and say, oh, okay, this person knows this person who went to this event. Then I can really connect with that. So be mindful. And again, this is for the visual learners out there. And I gave you real life examples because I don't believe in being an academic and giving you bad examples. So we have two wonderful investors that I gave you examples about this. It's Benton Moore in the middle. He's here, and Amy, who's here as well. And I built out they do a lot, but I gave you some examples. So like Benton is part of course, SDAC, TCA, SD, and other things. The co-fund in Orange County, and he's a lawyer, right? So you see how that service provider piece, he is that. He's also an advisor and coach for the SBDC and building out funds. He's amazing, right? But those are the pieces that you can say, oh, he might know somebody who's at SDAC, who's in the medical device space, or is in social innovation, or is in, oh, I should have a coffee meeting with him because then now I can see where my spokes are coming out of the SDAC. Or, oh, he knows people at the Cove. Oh, I want to go up to Orange County. I've exhausted San Diego investors. They're not going to invest in me. Oh, OC is super important. Oh, but I also see that Amy Duncan, who I know here, is also TCAOC. So how can I connect with other people in Orange County to kind of connect the dots? And then of course, like you don't know who she knows. So the more that, you can build out a spreadsheet too, but I'm just going to say that for the visual learners out there, you can say TCAOC, okay, who are the people that she connected me to? And then say, okay, do they align with my investor persona? Maybe you highlight them, maybe you put them red, whatever it's going to help you really grow that ecosystem. This is one way to really do it. Now, Amy, I just basically said TCA San Diego OC. She's part of Stella Angels, SDAC, but she's also she's a marketing strategist, and she's a guru in the life sciences. So you see, if you were a life science entrepreneur, you're like, oh, I should meet with Amy and ask her specific questions in the life sciences, because I need to reach those investors are in the life sciences. Do you see how that allows you to be super focused on the asset you're going to do, the investors who you need to interact with, and you grow that investor relationship very easily. And then these other three ladies are my colleagues, who I adore. They're amazing, and they're really huge people that you should know. So I wanted to kind of put that out as like 2 for 1 here. Lorene Pendleton is on the right, bottom right. She's in New York City. So if I would say, hey, what are the 4 things that I go to her for? She's part of Portfolio, one of the early Portfolio investors, and that's Portfolio is a fund of funds in Silicon Valley, launched by Trish Costello. They do amazing things, right? She's also in New York City, so that's away for me, right? So I want to be able to have a connection in all regions in the United States. I make sure I have somebody in each region that I can call up or text, and they respond to me within 5 minutes. That's what I want, right? So I know that she's New York City investor. She's also part of Golden Seeds. If I have any questions for entrepreneurs, if an entrepreneur comes to me and says, oh, I've pitched Golden Seeds. Oh my gosh, I haven't heard from them. Can you do a warm intro? Perfect. It's Lorene Pendleton. And then she's also part of Start Out Investors. So LGBTQ investors, and she's spoken on panels with me there. So that's why I go to her. Alicia Robb, the same sort of thing. I'm saying, okay, Next Wave Impact Fund, DNI investors, impact investors, vegan investors, Denver, Midwest. Those are the reasons why I go to her. And then I go one step further. I didn't do it for all of them, but I go one step further, and you can do this too, is identifying specific individuals. So Next Wave Impact Fund is Jody Peterson and Winji Sung. It's not Singh. And Winji is the CEO of Cartier Women's Initiative in Paris. I want to know her, and I know her very well. And I want to make sure that I have that connection. Jody Peterson, she's in Prague. So anybody who's pitching to EU investors, she's the one that I always text and make sure that we get connected. And on the left is Anna Raptis. She is also Portfolio. She is in the Rising America Fund too, but she knows a lot of supply chain VCs and female LPs. I'm raising a fund in 2022, so definitely need to know who are the female LPs that would like to be part of my fund. That is part of my development of my network, right? I wanted to give you that insight. And then of course, she is a really strong investor in the LATAM environment and industry. So that's how I codify my network, is doing this hub and spoke, not on everybody, but on the ones that I want to keep track of. Man, I want to keep track of. And how I do it also on LinkedIn is that if I post an article on LATAM, I definitely tag her. I tag her, I reach out to her, say, hey, you know what? I just shared an article, wanted to make sure that you got a hold of it, so that when I introduce her to an entrepreneur who needs a LATAM investor, she's heard from me, right? So those are the kinds of things that you can do as you develop your ecosystem, and you know these, like, let's say 20, 30 investor heavies that you have, the heavy hitters, that you're constantly being in front of them, that you're constantly tagging them on articles that you're sharing them value. So they're hearing from you, they're seeing you on LinkedIn, so that when you send them that email, they're like, oh, I've seen her in the ecosystem, or I've seen him in the ecosystem. Let me have a conversation, because man, she's a mover and shaker. She's done a really great job, or he has really shared so much value to the ecosystem through sharing of articles and publishing his own articles. All of that makes for that good relational capital. So I will stop here, I think, before I go into the marketing campaign. Yeah, hub and spoke cephalopods, I love it. Yes, I love, man, you're like going into my heart. I'm a marine biologist, my PhD is in marine biology. So I love it. I studied sea urchin fertilization proteins. So I love the ocean. Thank you, Nicholas. Thank you, Kelly. Thank you, Benton. So let me go on. Misty, do we have a break, or we're good?
You can keep going. We're gonna take a break after you're done, and then I'll do the second piece.
Okay, sounds bueno. So I think I only have about 10 more slides. I know I did too many. I wanted to kind of like now do a couple of like recaps. It's a focusing marketing campaign, really, what you're doing. Do not use a shotgun approach. I think that Amy used a word that I like hers better. What was it? Shoot.
Spray and pray.
Yeah, spray and pray. I love it. So shotgun spray and pray approach is just, it doesn't get you anywhere. It used to. People said, oh, you have to do that to get like to 1,000 investors. Now people are like, we don't have enough time to go through that. Especially angel investors are doing it themselves. The fundraising process is a marketing campaign. Basically build your list, qualify that list, and get warm introductions by having all of this ecosystem stuff. Focus your fundraising efforts on those investors that understand your business. Sometimes they might not understand the business itself, but they understand the business model because it's a parallel to other models that they understand. They have investable cash, right? You can't just ask them like, do you have investable cash? But how you know it is that you say, hey, what was your last investment? Tell me a little bit about it. And they're like, oh gosh, I don't know when I last invested. Maybe been like 5 years ago. You know, I invested in a company, and my last company was like another 5 years. And you're like, oh, they might not be investor, or they have investable cash. You know, everybody at SDAC has investable cash because they are drinking the Kool-Aid. They are going to invest in a company at the end of the 6-month, 9-month process. So that actually is a benefit, one of the huge benefits, and one of the many benefits why you should continue with SDAC. The third thing is align with your values. Again, if you haven't done a values exercise, do it. Know what your values are so that you can have that conversation with the investor and know that they are also values aligned with you. That makes the a world of difference, and that they can bring more value than just a check. That's how we heard from Karen here, that she has some strategic investors, and that's super important. I talk to entrepreneurs all the time about what can I do for you after the check, right? And that excites us both to be able to build a company together, right? So it's very exciting. Your target investor list, how do you create it? Again, we have the investor persona, you have the action plan, but then you can also just build out a list, and you probably have a list already. But one way of doing it, and I've kind of alluded to this too, this is coming from JD Davids, one of my dear colleagues, and how he creates his lists with the entrepreneurs. So identify, it's kind of like the backwards method. Identify 3 or more verticals, your industry, that's part of your business, right? So the 3 verticals is kind of like the backwards approach. List potential buyers on a market map. I'll show you a market map. Identify key market players in your vertical industries, and then list the companies who have achieved successful exits. And that's how you're going to find out the tier 1 investors. And that's how you're going to find out about the VC investors who were a part of that deal, and identify the angel investors. So it's kind of like a backwards approach to finding out who are the ones that I need to reach out to, because sometimes it's not in your network, right? So this kind of dives into like, oh my gosh, where am I going to find these people? I don't even know. Like, I've exhausted all of San Diego and SoCal. This is one way to do it. And I know some people have not seen market maps. So this is one of my favorites because I invest in femtech and love this one. So I've invested in Joylux here. We up here, Rory, we're in due diligence with them. And of course, I would have put in Lips in here as a social media sex tech solution. There's other ones that are here that we've invested in, and they're not here. They have to be fixed. But this is an example, right? So you have to see like all of your market map in your industry, and say, okay, who are the major players in the industry? And sometimes these have like investor sites that you can see who are their investors. You can check on PitchBook, you can check all over the place to find out who are their investors. And sometimes they're super earlier stage, like Joylux is, relatively early stage. Call them up and say, hey, I'm another entrepreneur. Can you help me? Can you introduce me to some of your investors? Of course, they're going to do their due diligence on you of saying, hey, are you legit? Where's your business? They're going to ask you those questions, and they might introduce you to the investors that have been awesome for them, right? Because they want to bring value back to their investors. You see how it's a value chain and this trust chain in the investor world. So that's a market map just for you to kind of have an idea. And then what? It's basically work the list. Like it's as simple as that. You have a list, you have an investor persona, you have actionable steps. You just have to work the list. You cannot go after it as a gunshot method. It's just not going to work. And this is the list that I've been mentioning over. And then when I share this out, and Chris, I know you've always reminded me to send you things after I talk, but these are all linked to PitchBook, Crunchbase, Venture Deal, CB Insights, AngelList, LinkedIn, Privco. All of these give you great insights of all of the competitors that you have out there as others. Startups, but also who has invested in them and who are the investors who have profiles on these sites, right? So, and I added one Sourcino at the very bottom. It's EU based. So if you're looking at EU on European investors, that's a great place to hunt for them. So this is your list to go hunting for investors if you need to do it that way. Again, relational capital is super important. So, events like this in your ecosystem are so important because that network effect really matters. So let's see. What you can ask the investor, and this comes up a lot. And I think I'm going to go into into the coffee meeting at the very end. But you can, and we've alluded to this already, you can apply the same approach to screening that the investors do to you and screen your investors. So have they invested in your space before? Did they have a successful exit? What do they know about your customers' behavior, their needs and the trends? Are they intimately familiar with your competitive landscape? Are they connected with larger investors? So those are the typical questions that you can ask an investor as you're kind of having a relationship with them. These are not bad questions. These are questions that investors like, oh, they're actually thinking about that. Or, hey, you know what? I was on Crunchbase and I saw that you invested in Joylux. Well, how is that? Like, how is that deal? How is that going? And sit back and listen, right? And then investors can be like, wow, this entrepreneur did their homework. They know who I invested in. They're curious and they're listening. Wow, they're coachable, right? All of those things are the little nitty gritties that go along with this investor relations journey. So just kind of giving you, the question is, where would we look to find celebrity investment funds, and what would be the title of that person who manages those investments for celebrities? Yeah, Twitter superstars share published lists on Twitter all the time. That is very true, Karen. Twitter is literally, I hate Twitter, but I go on there ever so often. And management, it could be a managing partner or a GP general partner. So look at those types of titles in LinkedIn or on Twitter. The easiest thing too is to see, okay, what are the VCs out there that are investing in your space? That's why we go back to the market map, right? Who are the ones that are investing? Let's say like, not Rethink Charity, but Impact. There's an Impact VC, Heidi Patel. I'm getting tired now. Heidi Patel is part of it. So if she's the one that would be investing in your company, you would kind of talk, not talk to her, but like see who she's invested in, and then reach out to those entrepreneurs and see if you can get an intro. I mean, through me too. But what's next? Don't take it personal. It's a numbers game. We already went through that funnel, and you're going to kind of go down and go through that list and go down that funnel, and you're going to get no's, and you're just going to devote more energy to booking meetings. And they need to bring more than just financial capital. We've alluded to this too. It's more art than science. I wanted to bring this up also because trust your gut. If you feel that this investor is just not worth it, they're asking you like weird stuff, or they are asking the wrong information, right? They don't know the industry. What kind of value will they bring to you? So just trust that gut feeling of how you feel about that. It's a long relationship, right? So you get better like that investor. And it's really about bringing value to both sides of the investor table. You bring value to the investor because you're going to add to their portfolio. Have that confidence that you're adding to their wealth. right? I mean, really, that's what you're doing, right? And they have to feel the same way, that you are bringing value to their portfolio and their wealth creation. Why is it the journey so important? Is because knowledge and relationships matter. We've kind of gone through this already, but the knowledge is that the investor needs to have knowledge in the industry or customer, and that's important in the scalability of your business and the relationships, open doors, and all of that. So the last bit is coffee with investors. I get this question a lot of how do you actually do a coffee meeting? I've given this talk also to the investor side. So I just want to make sure, I think the last slide that I had is more investor friendly, but still we'll go through that. I love this quote is 300 years ago during the Age of Enlightenment, the coffee house became the center of innovation, and it's still today. The coffee meeting is one of the most innovative piece, well, not innovative piece, but the most like impactful piece while we're funding and growing innovation. I want to make sure there's 5 chats. So I just want to make sure she's on IG. Yes, thank you, Benton. Okay, cool. So Lady Gaga will low key endorse your enterprise free if she loves your company. Yeah, impact fund. Thank you. Yeah, great chats. Thank you. So what's the coffee meeting? It's to gain investment is really one piece of it is actually to support the innovation ecosystem, because you don't know, it's kind of like a blind date sometimes, but you're both coming together because you both want to know each other a little bit more. You've kind of said yes a couple of times and you're really growing your ecosystem. So maybe that first chit chat is like, hey, what event have you gone to? Oh, that event that we were at was really fun, right? You've met a couple people. So just think about it as that, like this kind of more abundant mindset of growing and supporting the innovation ecosystem. You can break down the business into bits of conversation. So that's one thing that I work on with some of the entrepreneurs that just don't know how to like not pitch. Don't pitch, right? At a coffee meeting, only if the investor's like, okay, pitch to me, but have like a humble brag. A humble brag is like, hey, you know what? I love my customers. There's about, 2,000 of them, and we consistently talk to them. And one of them is that really love what we do is because they love the innovative design of our technology. You see how I can easily, humbly say exactly what I'm trying to pitch to that investor, but they're like, oh, she can say it super easily and super conversational. Understand the investor. You can get a better understanding of the investor. You're going to get that gut check, right? That intuition is going to come out super easily in the coffee meeting. It's also the qualitative portion of the due diligence process. There's a quantitative, send them your due diligence. If you do have due diligence, send your deal room, send them all your financials, all your valuations, all of that. But it's like, how do you talk to each other? That qualitative portion is super important. And you have to understand the EQ of your investor. You can get that in that coffee meeting. And they're doing this whole list is what I flip it to the investor. Is like, this is exactly what the investor is coming to the table with as well. It's not a marathon, it's a sprint. And of course, it's about the journey, not more than destination. And this is something that is super important in that coffee meeting. It's not about really how you're pitching or how you show up and all that. It's basically be thoughtful, right? Investors are equally as nervous sometimes, right? Because they're like, what am I going to ask them? I don't have the deck in front of me. What about if I don't have the deck? What about it? All these things, they have questions maybe for you, but they're as nervous as you are. They're like giving you money, right? They're giving away money to you to do wonderful things. So you have a duty to show investors who actually innovates, right? I think that's something that is really something that all entrepreneurs can bring to the table is that, wow, I'm innovating in the space. Because man, I love this space. I love innovating. I love having new ideas, and be thoughtful about that, right? And say, hey, innovation rocks, right? Be present, especially in a world where everyone is too busy. Listen, right? If they're talking, listen. Sit down, like pause a little bit. You don't have to be like always like this, and you have 30 minutes or 45 minutes with that investor face to face. Wow, that is priceless, right? And all anyone wants to be is acknowledged for their hard work, right? Or their work in their ecosystem, or while they're showing up. And especially after COVID, everybody's like, like freaking out about being present and like how do we be present after being so disengaged? Just know that the more that you lean into that, they're going to notice that. And that's those little nuances that make that relationship so powerful. And then be yourself, right? Investors are interested in the jockey. So strengths are important to focus on. I was just talking to, had like 5 meetings with entrepreneurs today. And one of them was like, how do I show up? I'm like, just as you are, right? Like when she speaks, she has this grounding of her talk. I'm like, do you realize how grounded you are whenever you talk? She goes, no, I just think that that's just how I am. I'm like, no, just know that's your strength. So when you meet with somebody, with this one entrepreneur, I'm like, know that you have this grounding piece that you can actually leverage. Or some other ones, like Kelly is super like passionate and she's like this, and she's like, I love everybody. And she's always has a huge smile on her face. Know that that's your strength, right? And show up vibrantly like that. And maybe another way is like, you're very, very shy. That's okay too. Maybe that investors be like, wow, they're very thoughtful, right? They're shy and they're actually thinking about, they're like, oh, wow, that's good. Can I get back to you on that? You don't have to be sorry that you don't have the answer right away. So be yourself. That is super, super important. The nuts and bolts of the meeting is do your homework, check their professional files sorry, this is where I messed up. It was the investor piece of it, the profiles of the investor, Gus, LinkedIn, Facebook, Twitter. Ask them how their day is going, right? Like it's very personal. Ask the investor about their investment thesis. That's a very, very, very common question. And an entrepreneur, an investor should be like, this is my thesis. Summarize a meeting at the very end and set appropriate expectations for next steps. Do that first step of saying, hey, you know what? It was great meeting you. I'll send you that email, right? Or you know what? Just reminding you, there's that introduction. Can I send you an email with a blurb of my company? Is that cool? Yeah, cool. That's great. So take that initiative to say, okay, what is that? Those next steps. Mention how valuable the meeting was to you, right? To them and of course to others, right? Maybe you have a meeting with other people in the coffee meeting. So say, hey, this was super valuable. I loved your insight on the industry this way. And I'm gonna bring it back to my team and we're gonna talk about it. And then if you say something like that, like send them an email later, not saying like, well, here's my pitch deck. It's like, wow, you know what you told me about the industry, I did take it back to my team and we talked about it. And these are the things that we talked about. Like super easy email. They're like, wow, they didn't pitch to me again. That's kind of cool. Okay. And then, you kind of carry on that conversation. Connect them to others who can help them. Even on the entrepreneur, sometimes an investor is like, oh yeah, this or that, something's going on in their life, or like, they're looking at other portfolio company, whatever it is, right? See if you can help them. Well, that's a turn of events, right? And usually they want to help you. So know that that's going to come out of that. And the best practices is that investors don't invest from the first or second coffee meeting. Don't expect it. No, it's a process to get to know investors. And also the investors are looking for red flags. So know that they're kind of like just keeping their eyes and ears open of inconsistencies. So if you say your valuation at the very beginning of the meeting, because you're like, okay, I got this, and I'm going to say it's 7 million, right? I'm going to stick to that. And at the end, you're like, well, it's kind of like 5 or 6, even if, not that you're going to do that, but I'm just saying like something like that, that's a ding, ding, ding to the investor saying, oh, do they not have a valuation? Is he or she kind of wishy-washy? That's not good, right? Essence of the entrepreneur is that I know one time somebody says, oh yeah, you know what? I pitched to Golden Seeds last week, blah, blah, blah. And you know what? They said this and this and this. And I was like, Golden Seeds has not met in like they just met like last month or something like that. I know they're only meeting like 3 months from now. So I texted my Golden Seeds people. I said, did somebody actually pitch to you last week? They're like, no, we didn't have a meeting. I'm like, like don't lie, right? So you're going to get that essence of that entrepreneur of how they interact and inflate things or deflate things. And then team dynamics. If you do have the team there, then they're kind of checking to see, are they actually in line, the CEO and the CTO or the co-founders? Is there something kind of between them? Or man, they're like super on track. That's like the green flag. That's awesome. I always say ask about their volunteer work, just because that kind of shows you a little bit about their values. Discuss key differentiators that ignites the investor. Why are you doing this? Why did they got into investing? So you say, hey, this is why I'm doing it. Why are you doing investing? How did you get into it? And always have this pay it forward culture, because that allows them to have better conversations. And then I think I'm almost done. Oh yeah. And I think this is my last two. Yes, I think so. Something like that. So there was a question earlier about the cold email. Let me just make sure. Amen to the journey. Yes. I love it. It is so encouraging. Yes. Thank you. Okay. Oh, thank you, Sarah. Thank you, Crystal. So this is something that, again, it was asked, but also it's like after that coffee meeting, you're going to have that warm email. But again, like I wanted to kind of give you some templates of cold emails with that funnel piece. I'm sorry that it's at the end, but still it is here. So this is, there's two of them. Oh, sorry. This is a more tactical cold email and this is more personal. And so this is a personal one. It's super short, talk about inflection points. So, hi, I'm, Maria, founder and CEO of blah, blah, blah. We are creating blah, blah, blah. I saw that you are focused on XXX companies at this stage, pre-seed, Series A. So I thought this may be a good fit. There's currently no good solutions, blah, 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 blah about your company. And we think we've solved for the Holy Grail. Our business model is, this is a low cost company with highly regulate or low regulations, high something. So it kind of gives them that thought process of that you're thinking about the business model with a high potential for acquisition, right? We are coming to, or IPO, whatever you want to say. We're coming to a major inflection point in, we're talking to customers and they're about to buy, or we have 5 LOIs, letters of intent, and they're, that inflection point is that they're going to convert to customers. I'd like to offer you an opportunity to get in on our XX round, meaning like our seed round of how many dollars to finalize this piece. So that's like your use of funds. This is a great opportunity to invest in a company that will reach blah, blah, blah million in revenue in XX years. So that's how they can do that multiple that we've talked about before, and well poised for acquisition or IPO. Thank you. Regards, Maria. So that's a very easy cold email, not very long. You don't want to go on and on, but you're giving them those little bits that you're going to fill out that allows them to say, okay, I get it. And also you could also use this after the coffee meeting. Hi, we just met and just wanted to remind you I'm this and we're creating this. You could use this in that with that template. The other template is more tactical. Where am I? It's not going forwards here. Sorry. Whew, wait, here, more tactical. I'm Maria, founder and CEO of blah, blah, blah. We are creating blah, the value prop. And then just kind of list this all out. It's kind of like your executive summary, problem, solution, differentiator, business model, customer, all of that. We are taking investor meetings between this time and this time. Please let me know if you'd like to get on the schedule. Thank you, Maria. So that's more tactical. That's more like get on the schedule. You can also send a link. Some investors don't like that. Some investors do like that. So this is more like a tactical, piece like that. And then what's interesting is that after you have all of this, the facilitating the intros is if you have that format in the email, they can facilitate the intro to somebody else. So investor to investor is when it's not an investment thesis fit, but there's a professional personal connection, they can connect you. So they can take that email or that coffee meeting that you have and the feedback that you gave them afterwards and be able to go forwards. And then the entrepreneur to investors, entrepreneur in the same industry can intro you to the investors. So that's why these emails and this template is really important to have the nuts and bolts so that they can copy and paste into it. And the blurb is something, and I wanted to have something else down here and I just didn't have time. I was out of time. So the blurb that we've kind of talked about is important to have ready to go anytime. So if you have these kind of things, the mission, the problem, solution, differentiator, just in one line, and then have a blurb that says, I am Maria, CEO, founder of blah, blah company, where, we are the blah, blah, blah of blah, 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 whatever your value proposition is, and a little bit about the customer, maybe 4 or 5 sentences, and then you have that as a blurb, then you can actually share that with anybody. But if you build this out in this little format here, in 1-line segments, you can maybe build out a little blurb that you can share with anybody. And I think that's all that I have. Yeah, that's it. That's it. Stop share. Hopefully that was good for everybody. I was going at a marathon pace, but hopefully that was good. I can share the deck later. Hopefully that helped you, Misty. That's exactly what you wanted. I don't know, but okay. Any questions? Handful of people, some same email format that they can forward. Let's see. Oh, sorry, up here. Yeah, thanks you, Karin. I invest very small amounts of cash into founders. I love, but that's really important too. Like, I think that's super important for entrepreneurs to know that entrepreneurs invest in other entrepreneurs sometimes, right? Especially through equity crowdfunding. So, Karin, do you want to add to that, or you're good?
Yeah, I just started doing that again. I used to be an angel investor way back when, and then I invested a lot of money into my own company and have really not a lot of money left to invest in other fabulous founders. But I found through my building of Makina, a handful or two of really incredible people that are building great things. And I'm like, I want a piece of that. So it's been a great way for me to diligence founders. And it's also a way for me to give back when I know that they're looking for just a little bit of money, right?
Yeah, no, I know. Like, there was one entrepreneur many years ago, almost like 10 years ago, that we were having like an advisory meeting. And we were talking to them, and she goes, okay, look, if I had $2,000, I can go to Las Vegas and I can be part of the show, and I'm going to like sell all this out. And I know we'll look at the data and blah, blah, blah. And then I'm going to open up my seed round. I'm like, I'll just give you $2,000. Go to Vegas. And of course, like, I invested her later, but it was one of those things that even sometimes $500, $1,000, you can invest in them. And of course, I do not recommend that you don't do it with a term sheet or anything like that. That was kind of stupid. But again, like right now, equity crowdfunding kind of does that same thing. You can invest $200. They can have, a $100,000, $200,000 investment. And going forwards, also factoring. I've done tons of factoring, $10,000 to pay for manufacturing. You get back a certain percentage of, let's say, a loan, or that you have a percentage of sales. So there's so many ways to fund an entrepreneur. And sometimes it is just a little bit of money. Sometimes it's a lot of money. So I love that. Thank you, Karin, for doing that. And I'm sorry I didn't say Karin before. Okay, Karin, you asked about the short deck and don't attach. I don't open up decks whenever it's a cold email, but what's in a warm email, I do. So I think that I'm just saying from my own like experience, when I know it's somebody that's coming from somebody else, I feel like there's a responsibility to me that this person sent me a recommendation or an intro. I should probably look at the deck. Again, like if you're doing that, I would send a short deck to that person who's introducing you to that. And they know their investors. Like, I know some of the investors that I introduce people to, they only need the blurb. Like, they only want the blurb, and then they're going to be like, not responding, or yes, responding. Some of them want to know who they are and the pitch deck first. Then I do the introduction. So a lot of us in this introduction world of investors, we know kind of what everybody kind of wants. So I would say for the entrepreneur out there, have kind of those top 8 things that you need to have kind of ready for an email, and a little blurb of like 4 sentences of what you do, and maybe a little short deck. Right. So that you can quickly just send people that, right. Because I think I always ask entrepreneurs, what's your blurb? Send me your blurb and I'll do you an introduction. So, thank you. Whatever. Everything. Thank you. You're very welcome. Do a good job and be the entrepreneurs that you're amazing at. Oh yeah, so Kelly, invested through WeFunder, correct? Yeah. Thanks for so what are you saying is to put together several options that you can draw from? Yeah, I think that when you're going through this, like investor journey, and maybe Misty will go through it later, but even having a deal room, I know I've talked about that a little bit. It's like the deal room is someplace that could be like a set of folders on a Google Doc, or there's other things that you can on Dropbox, or other places have more sophisticated softwares things, but having everything kind of set up there in the deal room is like having profiles of all the teams, having your incorporation documents, having customer stuff or letters, all of that you already have with you. I know you do, right? Somewhere that you can quickly send to an investor. That also helps with due diligence. If you have your blurb before, when you're doing these introductions, you can quickly send it, right? And you have it somewhere that it's a super easy way of doing it. I have it like on my little Post-it stickies on my computer, and on my phone, I have it on my notes. So I can quickly just kind of share to different people through text or through email or through like LinkedIn, something that's short, because like LinkedIn, if you're doing like an intro or you're adding a message to somebody that you're being introduced to, you only have a certain amount of characters. So like I always try to make sure that I have like a short bio and a long bio, and like a short blurb and a long blurb, so that I can quickly like just share it, so that I at least get the introduction. Right? Because you know that you will shine as an entrepreneur after that first meeting, right? You know that you're gonna be like, I got it, right? So so that's like the preparation. What do you consider your differentiation in your blurb? In your blurb, like I would say hopefully I'm going to answer your question, is that, you're going to say, I am Maria, CEO and founder of this. We are creating a new technology that transforms the blah, blah, blah industry, and by blah, 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 the value proposition that typically, or you could do the shorter value proposition is like, we are the Netflix of whatever industry you're going to go into. That's also a good way of kind of showcasing that value prop. That's super easy. And then kind of go into their customer. If you're really early stage and you only have customer validation, or you have, surveys, you say, hey, we've had, 200 people, 200 customers that are buying this. Like, make sure that there's these pieces that are the traction pieces that an investor will like to see. And that, think about it also, is that the investor might not invest in you, but they're like, oh, this was actually pretty cool. I know Joe Schmo over here, he's gonna love this company. Let me take that blurb and send it to him. So kind of think about it as this like this piece that can be shared by many, many people,
Thank you, Sylvia.
I went too long, I'm sorry, but I had lots to say.
Oh, it was fantastic. And
Okay,
I love that you provided the templates and the links to everything. I'm sure that people are going to rewatch this and click through everything. And
and the
use these
templates will be
So
there.
thank you.
Yeah, on PowerPoint, and I will make it so that it is blue and San Diego and all the right fonts.
All right, thank you very much. So we're gonna take a 5-minute break here, and then Misty will kick it off with her session, and then after that we'll go into some breakout rooms. So I'm gonna pull up a quote here. I'll leave you with: when your audience relates to your business's values, it helps in building an instant connection. And that's by Pooja. Unfortunately, I don't know how to say her last name. So anyone, feel free to say it if you can, but I'll leave you with that quote, and we'll see you back in about 5 minutes, around 7:22, 7:23.
All right, everybody, I think we are back. Go ahead and get started again. So I just want to say thanks again to Sylvia. That was a ton of information shared really, really quickly. I always appreciate the practicality of what she brings to the table in addition to the expertise. So Sylvia, a million thanks again for stepping in and helping us out. And so I'm going to just do quick, my piece will be real short here. I'll just run through a couple of things, just mostly to reinforce some of the things Sylvia said. So slightly different look at the same information. So first I want to talk about the why. Can you all see my slides?
Not yet.
You can't see my-
Yeah, we can. Sorry. I thought you meant the other slides.
Yeah.
Oh, okay. Okay. All right. So let's talk a little bit about the why. So I've got two real reasons that I want you to go out there. I want you to do the work that you're doing because I think it makes the world a better place in a ton of ways, in big and small ways, and is meaningful and beneficial to everybody. So at the end of the day, we know that you're going to, as founders, you're going to work hard. You're going to work hard with your investors. Your investors are going to work hard on your behalf. Your employees are going to work hard. And that all of that drives us to this little green dot, which is money and an exit. So, so this is my sort of my little baby why formula. If you get to the exit, then you get to have some cool toys. And we expect you to do that. Take a break, go do some fun stuff. And then we think you'll get bored and you'll either start another company or you'll join us on the investor side and become an angel investor with us. So just one more look at big picture, why we're doing this, where we hope you'll end up in the long run. And we're glad you're here playing with us. All right, so I think of investing in cultivating investors in a very similar way that I would teach sales funnel to a business, right? So you start at the top end of your funnel with contacts, and then you turn them into leads and then prospects and then forecasts. And at the end of the day, hopefully what you've got is satisfied investors that are happy that you found each other and you're doing good work together. So in terms of contacts, just making that first list, I'm definitely of the same belief that you've heard earlier. There used to be a saying that you needed to do 90 pitches in 90 days. So not a fan of that. I don't, if every pitch takes you 5 hours between the prep and the follow-up and actually doing the pitch, you're talking about like 450 hours in 90 days, which means you're not running a company, you're just running around having meetings. So much more a fan of make the short list, make it meaningful, do lots of outreach, make sure you get introduced to as many people as you can, but doing being careful with the conversion. Much rather help you get 1 or 2 warm handoffs that are really good fit, and make sure that you're really well vetted before you go into that first meeting, than seeing you just do dozens and dozens and dozens of chasing. So let's say so from here, I put a little checklist up there. LinkedIn is your best friend. Go to my LinkedIn page, go through who I'm connected to, look and see if there are people there that you need to be connected to. Do the same with Sylvia. If you reach out to me and say, well, I make an introduction for you, I'm probably going to say no. I'm probably going to say, send me your deck and let me take a look at a deal. So there are not too many investors around that won't take a call from me or won't take an introduction that I make. But I'm always extra careful on the vetting, right? But it does mean if you ask me to make an intro, I'm going to do some vetting. And if we can, we're going to make that introduction for you. But coming to me with a short list of specific people or specific funds that you'd like to connect with is really helpful in making it efficient for me too. So first, we're going to use LinkedIn, use the internet. Like if you're looking for lists of funds, if you just put Angel Investors San Diego, Angel Investors California, it'll come up with lists and lists of organizations for you. You just want to see who's out there, and then figuring out who's already connected to those organizations. We can be a lot more helpful in that way. If you're on newsletter lists where things are happening, watch for those, watch for who's getting investment from people like you, watch what's happening with conferences, attend networking groups like this one or others, and then go look specifically at people's websites. So those are all just quick ways to get some things on a list, to get a list started. So I'm also the fan of like, start with a handful, don't work from the 100 or the 1,000. All right, so once you've got them, this slide is a little bit busy here. Get them organized somehow. So spreadsheets are great. Most people I know are managing this on spreadsheets. If you're clever with a good CRM, they can be very effective. We use HubSpot. HubSpot has all kinds of powerful tools. I can't figure out how to use most of it, but it's got lots and lots of stuff if you can take the time to figure it out. There's some, HubSpot is not cheap. It's cheap for a year, but then it gets pretty expensive quickly. There's some CRMs out there that are much more reasonably priced. So Insightly is one. I don't know if it's still free, but it's the Google version and it used to be free. If you're doing it with a spreadsheet, you can do some just simple things. So I put here name, email, phone. This looks kind of similar, not to the investor persona, but the way Sylvia was showing the tracking. But I always include a forecast too, and then come back to that list. Make it an appointment with yourself to come back and take a look at this on a regular basis and update the specific column, right? So if you, and this is subjective, but it's yours, so you can be as subjective as you want, and you can keep adjusting it as you go. So we use some forecasting stuff for things we do in the office. For investors, you can start to make some rules for yourself, like, hey, they've asked for my diligence room. Well, that's better than a 40%, probably better than a 50%. Maybe that's a 60 or 70% likelihood that you'll close that deal. And you can start all that way with, you put somebody on the list and maybe it's a 0 and you get their email and you send them that cold thing, and maybe that's a 5%. But as you get further into it, you can start to watch that. And if you're regularly looking at it and forcing yourself to update your forecasting, even in something as simple as a spreadsheet, it will help you stay connected, because it's a long play for the right deals, right? So you may meet somebody a number of times and have a variety of different conversations before you get to the point where you really are prepared to go into the deeper conversation and the investment opportunity gets serious. All right, so you've got a list of contacts. You turn it into leads. You start looking for information that you can find about them. All of those things that Sylvia was sharing about, what they're interested in investing, the size of their checks, the return window that they want, like how quickly they want to see the return, how big they want that return to be. All of those things you can start to suss out a little bit and turn your contacts into leads. And then, of course, leads to prospects. So this is just really this is applying basic sales strategy to investing. Right? So just using the same things that you would do to cultivate new customers, but applying it to investors, and, doing great service, being good with your follow through, asking for those warm introductions, making sure that you have some credibility. Asking somebody like a Sylvia or Benton for an introduction and not having a deck together, that's a waste of everybody's time, and it won't make it easier in the long run. So it's a good time to get the work done so that you can take advantage of when the things happen, they tend to happen fast, right? You might be moving in the environment, playing for a long time, and then when it comes together, it will surprise you how quickly it comes together. And that happens more often than it doesn't. And then finally, just staying on that forecasting, again, going back, updating those numbers, setting goals, right? So maybe you're setting your own investment goals for each month, and you want to get a certain number of pitch reviews from practice environments like the one we provide, or you want to get a certain number of introductions, or you want to get really critical introductions. I like what Sylvia was sharing about, focus on one, but don't put all of your eggs in the same basket, right? Don't get totally sold. Like if you can't get this one investor, then it all falls apart. So start to make backups and contingency plans for yourself. And then give yourself progress goals. So how do you get to the next meeting, right? So if first you get the introduction, and then you get the deck review, and then you get, a technical review, those things usually happen on the path to getting a request for your deal room. And now is a great time to get your house in order. So make sure you've got good representation. Make sure that your stock option plans work for you. Make sure that your lawyer's looking at that for your perspective, because the easiest time to get those things settled is now. Make sure that you've got a cap table that's going to work, a nice clean org chart, everything organized in a shareable vault. So those can be pretty simple. Chris did put up on the website the link to the due diligence vault that we require. So don't put stuff in that vault, just copy those down. We use something pretty simple. I've got something a little bit more elaborate here. So for San Diego Angel Conference, we use basically just 4 folders that include all the information that we have. It's fine to use some shortcuts to share folders in more than one place, or share files in more than one place. Because a lot of times the person who's looking at your employment documents will want to find all of those in a particular place. And somebody who's just doing contract review wants to be able to easily get access to those as well. So the kinds of things that you should have in your vault, the real question you should be asking yourself about what goes in the vault is, what are the things that could potentially be a risk for the company, that you have mitigated those risks in a way that that can be followed up on or held accountable, right? So making sure if you're a Delaware C Corp, you've got to have board meetings and you've got to have minutes, right? Make sure that those things happen. All of your financial records should be there. Contracts, everybody's going to want to be able to look at, if you've got key employees, we want to know that there's some incentive for those folks to stay around, and there's some consequences if they don't. Just all of those kinds of things. Anything about property that you own, your intellectual property, your physical property, any of those kinds of things all belong in your vault. And then when you get the money, that's just, you're just reaching a new place in your relationship with your investors. So make sure you do great communications. I can't tell you the number of investors I had in the couple of months after SDAC 3 who came back and said, geez, we're getting almost daily updates from these companies. Now we're getting these quarterly updates. Like, just doesn't feel like enough after, we went through this intense period where we're working with those companies basically every day for, 5 or 6 weeks. So be in regular communications with your investors. Don't forget that they bring more to the table than money. So think of them as part of your team, share your wins with them, lean on them when you need stuff. And the best place to be going back to them isn't when you're in a crisis. So if you're regularly in communications and you have a good cadence with that, it certainly makes it easier when crises come up, and they definitely do. All right, that is what I've got. So my piece was really short and sweet. If you have any questions about any of that, you can let me know, or you can, if you put stuff in the chat, I'll check the chat. I don't do nearly as good as Sylvia does with that. But we can go kind of straight to the break rooms. Karen said monthly versus quarterly. If that's something that's easy for you to do, of course, monthly is better. But if you're filling a monthly report with basically the same stuff you're writing over and over again, you might want to switch to a quarterly, right? The investor doesn't want to waste their time reading the same, if there's not significant changes or information, there's no sense in sending a report when there's nothing to report.
May I ask something? I mean,
Sure.
what happened was I started sending things out monthly, and I got scared away from somebody. So they don't go out just to our investors. They do go out to our investors, but they go out to partners and other people who have been interested in our company and have supported us along the way. And I think it was just that negative remark that I got was like, don't send me something every month. It's just too much. I was like, okay. So I've always been kind of like monthly, quarterly.
Yeah, so it's different for every investor. So one of the things we've been kicking around for the San Diego Angel Conference is, and Chris has actually been working at it for a while, is setting up an update site for each of our portfolio companies. And so we've got a website, and the information goes up there every time something interesting happens. And then once a quarter, we send a note out that says like, hey, there's updates. It only goes out for us. We're only going to send that out to people who are on the cap tables. And only people on the cap tables are going to be able to see those company updates. But if you wanted to go look every day, it's right there, and you could, right? You could see all of those. You could set it up. We may get sophisticated enough to be able to set it up so that there's notifications too, but I don't think we're there yet.
Thank you.
So yeah, that might be one path. Other questions from the chat? I really feel like I didn't have much to offer after Sylvia's talk, so that's fine. That was great. So there's a question, can you provide more information on setting up and maintaining a Delaware C Corp? So a Delaware C Corp it's just where the papers are filed. Most lawyers, we've got tons of attorneys that can set those documents up for you. When you move to a C corporation, you're going to end up paying the franchise tax board. So if you're moving from a partnership or a sole proprietorship to any of the corporate structures, you're going to be stuck with that. That's a prize for living in California. I can't tell you what you get for that $800 a month that you'll pay, but you will pay it. And if you don't, the penalties are significant. So it's worth making sure you don't miss those. In terms of maintaining it, Benton, you're still on the line. He might have actually stepped away. He sent me a note. You've got to have articles of incorporation. Those are going to govern how you behave. Your articles of incorporation should line out basically how you intend to deal with things as they come up, and what you can be counted on to provide. So if you say you're going to have 2 board meetings a year, you need to have 2 board meetings a year. If you say you're going to have a board meeting every other week, you're stuck with that. So think twice about what you put in your articles of incorporation, because you will have to comply with what you set up. It also means a Delaware C corporation means if there's any problem that comes up, you're basically agreeing to have that issue legally mitigated in the state of Delaware. Everybody asks for that because there's a lot of precedent. So, and the Delaware's business laws are favorable to business. So it's that combination of those two things is why the Delaware C is always required. So I think I've mentioned on this call before, Nevada has tried to realign their regulations to match Delaware as closely as possible. But they are not going to have the 150 years of precedent. So that's my elementary version. If you're very interested in setting up or transitioning to a Delaware C Corp, great time to do that is before you take investment, so that you don't have to go back to your investors and get those changes approved. And if you think your situation is pretty simple and you don't have a great attorney, you really can't afford an attorney at this point, USD has a entrepreneurship legal clinic that you can get access to, and they will help. It will help with those articles of incorporation. So basically, you have a law student who writes your articles of incorporation. The law student then has that work reviewed by a staff attorney. Generally, like most of the time, it's a Mintz staff attorney. And then the student will come back to you with those documents. So it does get a proper legal review but it does also give a law student a chance to work on some things. So if you're looking for that, let us know. I think I've connected people on that a couple of times in the last few weeks. We have a special form we can just send you, and then you can work directly with them. Once you start working with the USD legal clinic, though, they take their confidences super seriously. So no matter how much you tell them it's okay, they're not going to tell us anything about what you're working on with them, which is fine. But you should just know that even though we all work for the same organization, we won't have access to any of your documents or any of the things that you're working on. And that's the way you want it. Definitely want it that way. Any last questions?